carbon dioxide coming off of, say, industry, and methane coming out of waste management sites. So all of these things can be used to make something else. And that's where the science is really cool right now, where you can turn carbon dioxide into...
Hey, and welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes, and today I'm speaking with Eric Rubenstein of New Climate Ventures. Now, Eric and I geeked out on some sciencey, techie stuff, innovation stuff, but really cool because it puts into context how you should be thinking about investing in something that is technologically advanced, maybe even early stage stuff, something that is maybe more high risk. There's a lot that goes into the due diligence phase and the thought process of making an investment in something very innovative and cutting edge. I know a lot of people don't like to do that because it is seen as the highest risk out there. However, when you hear some of the stuff that's actually happening, especially when you talk about the corporate venture world and the bigger companies out there that are investing in next generation technology, it'll make sense, the entire thought process that goes into this, and might even give you some insight into how you might want to do due diligence on certain companies. So take a listen.
Welcome to Angels, Exits, and Acquisitions, the place to learn how to fund, scale, exit, and massively profit as an angel investor or entrepreneur. Brought to you by the Angel Investors Network. And now, here's your host, Jeff Barnes.
Hello, and welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes. I'm here today with Eric. Eric, how are you doing?
I'm doing great. Thanks for having me, Jeff.
Absolutely. Really excited to have you here. So Eric Rubenstein is with New Climate Ventures, and he has an incredible journey to share with us. And I'd love for you to lead off, Eric, and explain to us who you are, where you come from, and how you got to where you are right now with New Climate Ventures.
Oh, sure thing. Yeah. So Eric Rubenstein, based in Houston, Texas, grew up in Florida. But my journey into investing in startups and venture capital started in a non-traditional path. I was in commodities trading and energy trading for many years. And first with Louis Dreyfus, a company you may know, the family from Seinfeld, Julia Louis-Dreyfus, Elaine from Seinfeld. Her family has been in the commodities business and in commodity trading for almost 2 centuries. And so they have a deep history starting in Europe and expanding from there. And they've been in and out of energy businesses over time. So I started with Louis Dreyfus in Connecticut and was on the commodities trading desk, on the oil trading desk there. They moved me to Houston, and I moved over to Citigroup eventually. And while I was at Citigroup, I started investing personally in venture funds and then directly in companies. And I found a path while at Citi to invest on behalf of Citigroup as a strategic investor. So I started investing first on a thesis of streamlining our processes and enhancing our trade analytics, but later to develop new markets. The first new market I approached was recycled plastics. And the market after that was carbon credits, so voluntary carbon credits. And in the recycled plastics world, where the likes of Coca-Cola and Pepsi had made sustainability commitments that included so much recycled plastics in their bottle mixes, they didn't know how to eventually fulfill all those commitments and were looking for new solutions. I was seeing that there were companies out there that could now turn clothing into new plastic bottles. So our clothing, a lot of it is made out of polyester these days. And that polyester can be broken down into its monomers and built back up into polymers, and plastic bottles are made of PET largely. So you end up with the ability to turn clothing into plastic bottles or old plastic bottles into new plastic bottles. And it's infinitely recyclable when you break the bonds and put them back together. So that was exciting to be looking at that space and working with corporates in that way. And then on the voluntary carbon credit side, looking at what was happening at the time, which was forestry was largely the way that carbon credits were created. And corporations were just starting to make their own net zero commitments toward carbon. And so looking at that and looking at what else in the world there was that could reduce, remove, or avoid carbon, I started seeing that There are technologies that could capture carbon out of the air and store it in the ground. You could take that CO2 and transform it into usable things like jet fuel and diesel fuel and waxes and ethanols and cements. And that was exciting. But then beyond that, started seeing that there were bioplastics that could be made out of 100% bio-based materials that could be drop-in replacements that chemical companies could use. And looking at in the food system as well, I had personally been investing in food tech companies. So if you think about when Beyond Meat was becoming popular, started investing there. So as I was looking across everything that I had been investing in, I saw a common theme of this removal, reduction, avoidance in terms of carbon and emissions. And that all led to me wanting to accelerate the change that needed to happen in the world in order to combat climate change, because I saw that technologies were ready to take off and were enabled by the successes from solar becoming the cheapest energy source in the world, and Tesla being a good example, and EVs being a good example of how you can get product in a market that consumers just really like and will adopt and can just seamlessly use in their lives pretty much. And as I started thinking through all the other things that could be, we just need to change everything that we're doing in the world and how we're doing it. But we need to do it in a way that's approachable to us as humans, as citizens of society. And so that's New Climate Ventures was more or less born out of that. Some folks I had co-invested with previously, we all came together and started the fund.
That's awesome. So that's a really unique and, again, winding road, as I find almost every I interview on the show ends up having, right? Start out your career doing one thing, generally is to make money, something you thought, okay, I could do this and I could make money with it. And then that leads into something else, to something else, to something else, to eventually where we are today, which is doing something that you're passionate about, but also makes money, of course, right? So interesting that, you focused in on commodities and working for Louis Dreyfus. I honestly, I didn't know that about Elaine's family. So that's very, I'm assuming there was no Seinfeld showing there at the trading floor though, right?
Her dad at the time ran the company. So William
Okay.
Louis Dreyfus. So he would stop by every once in a while. We were located very close to where he had a house in Connecticut. So he would pop in periodically. And every time he did, he was the smartest person in the room. He just had such a deep history of understanding these markets and seeing them that he didn't have to be actively looking at them daily in order to quickly siphon the information down that was being shared with him in order to have thoughts. And he would share like some wisdom with us every time. So yeah, he was an impressive individual, and I enjoyed the time I had just spent with him.
Very cool. So I want to ask you a question. It's going to take me a second to get to the point here, but I think it's interesting when we talk about commodities and going from commodities, and people may not know what commodities are. Some may. Well, let me, before I ask my question, what kind of commodities tradings did you guys do? What were some of the core materials or the things that you guys are actually trading?
Yeah, and that's a good question, and it helps inform things that I'm doing now. Because companies that are creating new fuels that can drop into our fuel system, it's easier for me to diligence those, given that I have experience with physical commodities and financial commodities, and can think through how these companies can be successful and the logistics involved. But yeah, the first commodity I traded was jet fuel. So I was talking to airlines and refiners, and that was a lot of what I was doing at that point in time. But we were trading refined products mostly on our desk, gasoline, diesel fuel, jet fuel. All that was largely physical, what we were doing. So we had storage tanks that we'd store them in. We'd ship the molecules to different locations through pipelines, was largely the way we were doing it. But molecules also move by ships, they move by train, they move by truck. Through the supply chain, you're working with a lot of different people who take different roles in that supply chain. Crude oil, we were trading financially at the time. When I moved to City, I helped build out our physical trading platform, and crude oil was a part of that. Natural gas liquids is something we were trading as well at Dreyfus and at City. Those are like propane, butane, ethane. And then eventually, so not at Dreyfus, but at City, we were also trading plastics. And that led to the recycled plastics that I eventually was investing in.
So you guys weren't just doing financial trades to make money here and there. You guys were actually, buying them and selling them and moving them around, like the full lot, right? Not just doing it like some traders would do, where they're just trying to game the market a little bit.
Absolutely, yeah. No, the physical market was the core of the business at Louis Dreyfus. It was not the core of the business at Citigroup, but we recognized, given that a number of us had physical commodity experience, that you could learn a lot about what's happening in the markets and how the financial markets were going to behave if you understood what was happening in the physical markets. So
Yeah,
it was
absolutely.
partly for the education that comes with it, and then the other part was because it can be lucrative. There are arbitrage opportunities on the storage side, where you can leave a tank empty and you can fill it up, and you can own that in the tank today and sell it in the future. And that way you're collecting an arbitrage there on time. If you're shipping it somewhere from point A to point B, if it's cheaper here than it is there, and the cost to move it is cheaper than the price on the other side, then you can make money that way. So we're doing a lot of those types of trading. And then also between the commodities, where if you thought you were going to have too little of one and too much of another, you could trade them one versus another. So a lot of what we were doing was relative value trading. And then in addition to that, there was directional trading, but a lot of it's relative value, which is just a safer way to do it. And in the equities world, you could think about it as long short, like
Right.
these types of arbitrages or sector arbitrages. Again, it would be long short usually. Or if you're rebalancing your portfolio, same concept of, this one's going to outperform that one, but we want some exposure to both because they're both going to go up. And what if you're wrong? So you could do things like that. But that's how we were doing it.
So just so people have a sense for how much you're doing, give me an example of either your average or your largest trade in dollar volume.
Oh, yeah, it's interesting. I never really thought about it in dollar volumes in that way of like an absolute dollar amount, because everything ended up being relative value, or
Yeah.
the way we generally thought about it was the risk associated with it on any given day. So there's a calculation that's complicated, and I wouldn't know how to calculate it, but we had very smart people
Some really good
who built these
algorithms, right?
models, and we had the calculations called VAR, value at risk. And even now, I mean, the highest that might have been, and it was across the entire global business. So it wasn't by any means just me. And at the times when we had the biggest positions on, I was actually in charge of our strategy and our rather than trading it myself. But we were probably around 10 million of risk a day, meaning your P&L could swing by about 10. Your expectation would be there could be a 10 million swing on any given day. And then if you have these extreme events, it would move a lot more. But we generally were far lower than that. And but I mean, it means that when things are working, you can be making, even if you have 2 million a bar on, you can be making $2 million a day. And that all adds up over the course of a year. So
Yeah.
that's kind of the idea is not, don't go too heavy on your risk where you're risking, the entire shop or something like that. But to have an appropriate amount of risk, and then manage that risk appropriately, but continue to change your positions and make money over time, and try and max out that risk at any given time with different positions, so that you can maximize that value over the course of a year. So we grew the business significantly from day one to year 11 when I ended up leaving Citi.
So I wanted to bring that up because I think that's a really important thing for folks to understand, is that, one, you guys weren't even thinking about, actual dollars invested. It was, we have to be in this market. This is what our job is. We're in the market. And how much should we buy? How much should we sell? Where are we moving in? What's the strategy behind it? And so even your mindset was completely different, right? Because you're working in a large corporation, and the dollar amount, whether it's $10 million a day or 50 million, like that's when my mind kind of really expanded in terms of what was even possible when it comes to investing or raising capital. Is when I was working with our capital markets team, and they said, yeah, we can do upwards of $50 million a day, no problem. Like 50 million a day in investments. And that's, upside, downside, doesn't really matter. And that was normal, right? When you're at that multi-billion-dollar corporate value in assets under management, it changes things significantly. And so I wanted to bring that part up because I think it's really important when somebody is potentially talking to a corporate, right? A corporate venture team. And I know you had some corporate venture experience as well. You probably had a similar experience that I did, which is, it's not necessarily about the amount of money. It's about the relative value, the risk, the strategic upside that might come along with that. And knowing, I spent a lot of time working with capital raisers as understanding who their ICP is, their ideal customer profile, or in this case, it might be an IIP, ideal investment profile. Who are you going to go after and what are you going to say to them? Because guess what? It's not necessarily all about the money, right?
Yeah. I guess just parallel to what we were doing on the trading side, I was also working with customers. So when you bring up customers, those are customers of the bank or new customers into the bank. So those were oil companies, refiners, airlines, trucking companies, waste management companies, pension funds, hedge funds. And so another part of the job, at least for me, it wasn't for everyone on the desk, was to be talking to those customers periodically, to be sharing some ideas around what the market, we thought the market was going to be doing. And so effectively sharing some of our research that was our research from the desk. It wasn't the sell side research that was going out to everybody. And seeing if there were trades, so hedges most of the time for the customers, where they have an exposure where an oil producer they produce oil. So their risk is oil prices go down and their oil they're selling is worth less. So when the market is very strong with risk of going lower, we're talking to those types of customers more frequently. On the other side, a buyer like a airline, when oil prices were in the 20s, we're on the phone with the airlines and talking to them about how it's unsustainable. All the oil production will get shut in if we stay here. There's just no way that the market can stay here. It has to go higher, and have those conversations, and then have all the conversations in between, depending on who the customer was. And so a refiner, it might be more of a relative value conversation about, okay,
Right.
maybe you should be selling gasoline and buying diesel fuel. And maybe that's something that you guys should be doing, with the understanding that the market has to make more of one, less of the other, and it needs to change because of the way demand is behaving, or because there have been so many refineries built that cater to one type of fuel more than the other. And so all these refiners were going to be making more diesel, let's say, than gasoline. All of these types of things. So yeah, that was a part of it as well. So when you're talking about the risk on the one side and it not being absolute dollar amount, there was also other ways of creating revenue that wasn't just trading, which then it ended up giving us exposures actually that we had to deal with, whether that's us
Right.
hedging with something else. Again, why it's important to understand the relationships between everything, or it was just knowing who to call in order to put it back into the market, to lay it off to somebody else, knowing that they had the opposite risk and they had a need for whatever it was that we were taking on. So yeah, all of those things are things we were thinking about. But what I'm doing now with venture, and when you're thinking about investing in absolute dollar terms, where you have a finite amount of dollars to put to work, and then moving in and out of positions is significantly more difficult because they're illiquid positions. And we dealt with illiquid positions in trading, but where we would have to wait until they priced, and there wasn't really a way of getting out of them. But it's a totally different ballgame when you're putting things, money to work in the market, and then you have to find others to buy that off you in the case where it's not going to exit in the time frame that you want, or where opportunistically you want to sell it. So it's very different things between now and then.
Before continuing, please subscribe and share this video to help us reach more people and stay notified of our latest releases. Now, let's continue watching and learning.
So I hope you guys all paid attention, because that was like a master class on strategic investing, right? Understanding all these different pieces and parts that you have to think about here. Because I think a lot of people, they take it for granted how much research really goes into making smart money, right? And a lot of folks will just look at a tiny little slice of the pie, not realizing there's this whole ecosystem you have to look at to understand that. Which kind of brings me back to the first question I wanted to ask, which is, many people might remember the movie Trading Places, one of Eddie Murphy's movies. I think it was Dan Aykroyd. I can't remember all the gentlemen that were in that. And it was a really, really funny movie, but these guys were commodity traders, right? And they talked about oranges and pork belly.
Yeah.
And pork belly doesn't even trade anymore because we got away from using lard, and it's not a big commodity anymore that I'm aware of anyway. I know that they still sell it, that we still use it, but it's not on the commodities if I'm not mistaken. And when I think about what you did in your history and understanding these big market swings and market moves, and we now talk about new climate ventures, we talk about new and green energy and technologies and things that are happening, I don't see oil going anywhere anytime soon. I think that too much of the world relies on it. There's too many things happening. So it's going to be incremental shifts. I don't know that we'll ever get away from it. You might have a different stance on that. I'd love to hear that. But the fact is that there are things that happen on the commodity side. Like I said, you need oil to create gas, diesel, jet fuel, all that, but it's also creating the polyesters, the byproducts are helping us to make even pharmaceuticals, but we're making plastics out of this. We're making all sorts of different things. And even if, let's just say, let's pretend that oil is not a finite thing and it'll last forever. We know on this hunk of rock floating through space that there are finite resources, and some of those are very, very rare. And we would like to use them for a number of different things. Some of them are not so rare. But because of that, there's a finite amount of things that we can use for it. Even if you talk about supply chain, how are we going to get all of the stuff that we need to make concrete, as an example? How are we going to get everything that we need in the whole supply chain of making oil into gasoline? That's a really, really complex problem. But now we're talking about, well, there's other ways that we can use those things that were already created to create new alternatives, right? That maybe were not available before. I think this is where it gets really cool to see what's happening in your space, which is the technology is advancing rapidly enough to where something that we thought was maybe at quote unquote a sunk cost or a loss because we created it one time, like a plastic bottle. When they first started making plastic bottles, there wasn't really an intention to take plastic bottles and remanufacture them into new plastic bottles or other products, right? And now we're seeing technology shifting and changing. Like you said, being able to break things down into the monomer and then recreating the polymers, that's like scientific magic, really.
Yeah.
Right. And I know one of the companies you work with is Vartega. I believe you guys have invested in them. And I worked with them when I was a mentor at Techstars, breaking down carbon fiber, which we thought was never going to be possible. So I think there's a lot of really cool advancements that are happening in that space. And I can see why you're involved in that, because it is really cool. And material science, I've been told, is one of the biggest challenges we're dealing with in our day and age because of these transitions, these needs. So I'd love to hear what your thoughts are on, material science, applied material sciences and things like that, and how big this industry could really go.
Yeah. Biology and chemistry are kind of the two things that are going to be changing our world related to all of this and other sciences as well. But the material science is a material part of that, no pun intended, where when you look at all the waste in the world, and it's not just plastic, agriculture waste. I can just look at the trash we throw out at our house. So it doesn't even have to be recycling. It could just be trash. And it's just an incredible amount of waste. And a lot of that waste breaks down either quickly or over time and releases emissions that are terrible for the environment that we could reuse as well. That's also waste. So we have the trash waste. We have the agricultural waste. Let's say strawberries. You grow strawberries and they sit there too long at the farm and aren't suitable to be sold to grocery at that point. That also becomes waste. But it's resource, really. So you have something that you can use to turn into something. Same thing when you're capturing the carbon dioxide or the methane. So carbon dioxide coming off of, say, industry, and methane coming out of waste management sites. So all of these things can be used to make something else. And that's where the science is really cool right now, where you can turn carbon dioxide into waxes. And these waxes are very clean waxes. Where wax coming out of the ground that's produced to make oil, or that is oil coming out of the ground, really, it's just in wax form. It ends up being a green, a gray, a brown, a black color. This wax is pure white, and in what it can do is pretty phenomenal, and it can be a drop-in replacement for things that we use every day. So waxes that you can use it for cosmetics. Think eyeliner and lipstick. You traditionally you're using more petroleum-based waxes for that. It can be used to make surf wax and ski wax. It can be used to make even fats for the food industry. So you have all these different applications that are pretty awesome, just coming out of carbon dioxide when combined with hydrogen, which can be taken out of water by splitting the water and the oxygen. So like that's a cool application, for instance. But there's many
I
other
want to pause you on that one because I think that's a really unique approach to, climate change and combating climate change, right? Because here's the thing. You just talked about a real use and a reason for using CO2 that's in the atmosphere, in the ground, doesn't really matter where it is, right? And I remember, so for example, when we were working with I was in the insurance world and we insured power plants and we insured coal-fired power plants, right? And there was a big push by the EPA to really change how that was manufactured. So people still think of coal-fired power plants as putting these giant black plumes of smoke into the air, and they don't do that anymore because these changes have happened and they're able to scrub it out and take it out. And when I was on a submarine, we had CO2 scrubbers. We had to pull the CO2 out of the air so that we could continue to breathe the oxygen.
Yeah.
And I got to tell you, the amine that they use, that's a smell you'll never get out of your nose, right? If you ever smelled amine and have to live with it, you'll never get that one out. But being able to take CO2 and turning it back into something else that is usable, that's a completely different type of recycling that most people aren't even aware of. I think that's pretty cool.
Yeah, it's absolutely crazy and cool. And you can turn into fuels too. So that same wax, you can turn into jet fuel and diesel fuel. And so that's where you get the full cycle of a lot of the things that we're using today that come from petroleum. We could use even CO2 to make these things. Same thing with like ethanol. You can make ethanol from carbon dioxide too.
Mm-hmm.
Right now we make it from corn or from sugar or from all these places and we ferment it. But you could use carbon dioxide and replace that as well. And the key is having enough renewable energy or cheap green energy, something that isn't going to harm the environment from the power side, because it does take power. So submarine and aircraft carrier, those are good use cases where like you're usually, I think, fueled by nuclear. So you have at least
I sat on top of a nuclear power plant a few times. Yep.
Yeah, so it's like a cheap power source. And so because the power is cheap, you can make the fuel. So an aircraft carrier could be making fuels for the airplanes, for instance, on the aircraft carrier and not have to go into an area that isn't friendly to secure the jet fuel when when the aircraft carrier is deployed in unfriendly parts of the world. So like all those are pretty cool use cases for this. And the same thing with agricultural byproduct or something like that. If you can turn trash into fuel, for instance, which you can, you could do that too. At an army base, let's say that's abroad, you could do something like that. So you could have these various ways of using the waste and it's true in our everyday lives. It's true, at scale. And so there are companies that are trying to prove all those things out at scales that are meaningful. And these are things that really weren't happening. Like a decade ago, this wasn't really a conversation, at least in a way that would be commercial. But when I was at Citigroup and I started seeing these things, I was like, wow, the future is going to be sustainable aviation fuel. We're going to have to be involved there. Recycled plastics, I mentioned already. We're going to have to be involved in these new markets. And it would be great to be able to shape those markets and be involved early and be the leader and the expert in those as they scale. The problem is the volumes are going to be small at first and grow over time. So to your point on oil is going to be around for a long time. It will until everything shifts. So I mean, even with power, like there's been so much solar power that's been installed. I think 60% or something of the solar power in the United States was installed in the last year or something. It's unbelievable the curve that's hit now on scaling, which again, like 10 years ago,
well, it goes down to
like that.
I think a lot of that is you think about the bell curve, right? You have the bleeding edge innovators over there that believe in this, that understand that. You're seeing that, right? With what you do, you're seeing that. Then you get to the early adopters, right? And the early adopters are the ones who are going to really like it. But of course, you're going to have 90+% of the market still going to say, nope, not going to happen, not going to happen. And then eventually you get to the early majority. But crossing that chasm, as the book says, that's a very, very difficult thing to do.
Yeah.
And the early stage investors with the innovators, especially you think about the angels and the seed round, you're investing in innovators generally. And the likelihood that all of them are going to succeed is zero. We already know that. The likelihood that all will succeed is absolutely zero.
Yep.
But the likelihood that some of them will succeed really comes down to market timing, their ability to withstand the ups and downs of the market, to see the socioeconomic changes, the financial changes that are happening, the climate changes that are happening, and being right there at the right time. I am still waiting for the cars that we were promised in 2015 that have the nuclear fuel source where you can just put your trash in there to the nuclear generator like Doc Brown did back in Back to the Future, right?
Yep.
I'm sure it's coming, right? I'm sure something along those lines is coming because biofuel is a thing. Biomass, waste to energy, like we've actually helped guys raise capital for waste to energy treatment facilities. We've seen sub-Saharan Africa where they take biomass and waste and turn it into not only a power source, but also creating the clean water because of what they're doing with everything. It's incredible to see this stuff. And it is really fun, right? Like that's one of the things I love about my job is that we get to hear about and see these really cool innovations. And most people never hear about any of that stuff. But like you said, as the investor, there's a lot of information, knowledge you have to accumulate over years to be able to make smart money investments in these things. So, we're almost at time here, but really quickly, I want you to give us, what do you see as the future of clean tech or, energy that you are really excited about right now?
Oh, wow. Yeah, I mean, the future I'm excited about is when we are, and it's been happening incrementally, but when we are living our lives in a much cleaner way and where there are technologies, and we may not even know that what the technologies are as consumers. As investors, like, maybe we will, and that's awesome. But where as a consumer, you're just going to the store, you're buying things at the store, and it's all sustainable. And define sustainable how you want, but it's all sustainable things where it's low carbon, using very little water to produce it, less and less energy to produce it. And then you're buying the products at the store that happen to be significant, like maybe they're better than what we were buying before, functionally even, but they're also just kind of the same, where we wouldn't, unless we were paying attention, we may not even notice that that's happening. And it's the same in the house. Like builders, hopefully will be building more sustainable houses in the future because they can get materials that are more sustainable, that are at a cost parity to what they were doing before. It would be nice to see society move in that direction. And we might need some subsidies to get there. But in a lot of cases, we won't because technologies are advancing so much. So yeah, being able to use less energy, Nest is a good example of something that can help us reduce our energy use. But it's not something we really need to think about much. And it's something we just buy it and install it and it's working. So seeing all those things in the market and knowing that we're doing a better job as humans of being good stewards of the planet, because we're seeing the effects of climate change now more and more every day. And that's from where I sit in Houston, it's scary because we're having freezes, which never happened before. And then all of a sudden, your power's out for multiple days because all the power froze over. And then you're having, more and more hurricanes. Like hurricanes are hitting parts of Florida that traditionally didn't really get hit by hurricanes. It was 60 years before the southwest Florida was hit by Charlie in 2005. And then it was another 15 or so years until the next hurricane. Now we've had 2 in the last couple months. So it's just unbelievable what we're seeing. So my hope and what I foresee for the future is science will get better and better. People will be more and more engaged. Corporations are going to be more and more engaged and wanting to protect even their interests by either investing in as a customer or as an investor in these new technologies, because we need all of this to work in order to reduce our costs. Our insurance, you mentioned insurance earlier. Insurance costs will keep going up otherwise. We're going to be seeing more and more real costs associated with this to the extent we can reverse those costs. And benefit as humanity from it, from the technological advances. That's what I'm looking forward to.
Awesome. That's a really robust answer, Eric. I really appreciate it. And I want to thank you so much for being here on the Angels, Exits, and Acquisitions podcast. Where can people find out more about you and learn what you guys are looking at?
Oh, sure thing. The LinkedIn or even the internet, newclimateventures.com is where we sit on the internet. And and people can feel free to reach out as well. Happy to entertain questions and share co-investment opportunities. So Eric, ERIC, and newclimateventures.com would be a way to reach me directly.
Beautiful. Well, we'll make sure we put all of that information in the show notes. So if you're listening to this, go check out the show notes so you can find out where you can go to get in touch with Eric. And Eric with New Climate Ventures has been on the Angels, Exits, and Acquisitions podcast. As always, like, subscribe, and share, and look forward to seeing your guys' comments. So Eric, thank you so much for being here today.
All right. Thank you, Jeff. Really appreciate it.